company recently and looked at the offer letter and assumed that the amount in the offer letter is what you're going to receive at the end of each month? If this is a rookie mistake that you've done and you've tried to understand the difference between the two, then please do watch this video till the end because I will explain that. Hi there, Namaste. This is Akruti Agarwal Iyer and welcome to our next series, Taxation. As the name suggests, I'm going to discuss everything about tax over here, starting with understanding your salary structure. So the term that's generally used in your compensation structure is CTC, and as it denotes, it means cost to the company. That is the cost that the company has to incur to hire you. Whereas the amount that you receive in your bank account is known as in-hand salary. Generally, these two numbers do not match. And why do they don't? We'll understand that by going through the entire example of a CTC. So we've shown here a breakup of a CTC which includes various components: your basic salary, HRA, special allowance, cash perquisites, LTA, contributions, medical insurance, gratuity and bonus, a totaling to 12 lakh rupees for the year. Now what you receive per month is not 1 lakh rupees but much lower number, and to understand that we shall break down the CTC into 5 main components and see how you receive each one of them. So the first one is your salary and other allowances. This you will receive each month. So the 7.5 lakhs divided by 12 is something that will get credited to your bank account each month. Perquisites are something like leave travel allowance, telephone reimbursements. This amount depends on the company's policy. Sometimes you may receive it each month. In some companies, you have to submit the bills to claim this amount, and there would be a fixed cycle. If you don't submit the bills by then the company pays you this amount. Bonus and incentive. Well, bonus and incentive clearly depends on your performance. So there are performance cycles in every company and you would receive it based on how well you've performed in that cycle. And the gratuity amount is actually something you receive when you quit the company after working for 5 years. So if you quit the company in 3 years, you don't receive anything as gratuity. Insurances. It's a benefit that you get. You are not given that amount, but the company buys the insurance on your behalf. So the expense to the company towards the insurance premium gets added to the CTC. But obviously, you're not receiving that money in your bank account. Contributions to Provident Fund and National Pension Scheme. These are a part of your investments. So basically, the way EPF and NPS works is that the employer directly contributes yours and his contribution to the investment. You can access the investments based on the terms and conditions of each one of them. So they are investments in your name. It's just that the employer is directly investing it into these accounts. As you have seen that you do not get all the components of the salary. Components like contributions and insurance and gratuity is not credited to your bank account, whereas general salary, allowances, perquisites is what you get each month. But apart from all these components, there's one major component that gets deducted each month. Yes, it's your taxes. And the thing is, the tax is not evenly applied on everything and anything. Each component of your salary is taxed differently. So what I'm going to do is, I'll explain you this and then tell you how they are taxed also. Now, once you've understood your salary structure and its component, let's understand the taxability of these structures. Your taxability is divided into 3 parts: components which are fully taxable, the ones which are partially or conditionally taxable, and the ones which are tax-free, the good ones. So your fully taxable are your basic salary and your special allowance. Partially taxable is your HRA, car maintenance, and tax-free components. You get a standard deduction of 50,000 rupees, meal coupons, and certain more components which are generally not provided by employers these days. I'm going to explain you some of the major components of your salary structure which are partially taxable and you must claim a benefit of them. Starting with HRA or house rent allowance. In this case, you can claim a deduction of the rent that you pay for the house you're living in. It is one of the easiest deductions to claim. Basically, you can claim a minimum of these three components: actual HRA as per your CTC, 50% or 40% of your basic, or the third portion, which is the actual rent you pay minus the 10% of your basic salary. So for instance, your actual HRA is 17,500. Your 50% of basic is also generally the same amount, but the actual rent that you pay is only 15,000. Minus 1750, you get a HRA of 13,250. Now the least of these three components is 13,250. So that is the deduction you get for tax purposes. LTA, or the leave travel allowance, think of it as a component in your salary where the company tells you, take leave, go travel with your family, come back, submit the bills and make a claim in the tax deductions. Well, it's very simple, right? Yes, all you have to do is submit the authentic bills of your travels to your employer. You can claim LTA as a deduction for 2 years in a block of 4 years. So currently we are in a block of 2018 to 21. One thing to note is there are a few conditions and criteria that needs to be fulfilled when you are claiming LTA. So we've attached a detailed article on the same in the description below. The next two components that usually a company claims gives deduction for is meal coupons. That's 50 rupees per meal per day. So you can claim 2 meals such a day. So you get a deduction of around 2,200 rupees. The second deduction that company generally gives are for car maintenance allowance. So if your company has provided you a car, or you have your personal car that you're using for business purposes. So if your car's engine is less than 1600 cc, then you get a deduction of 1800 rupees per month. If it's more than 1600 cc, then you get a deduction of 2400 rupees per month, and you get an additional driver benefit of 900 rupees per month. But as I said, you get a deduction only if this car is used for business purposes. Once you understand these major components of your salary structure, it kind of covers as to how they are separately taxed. One of the components that I haven't discussed here is your reimbursable salary component. If you remember, till 2 years back, you were required to submit your medical bills, your telephone bills and your conveyance bills to claim them as a tax deduction. Well, 2 years ago, the government came out with a change in the policy where every salaried individual was allowed a deduction of 50,000 rupees towards their medical and travel bills. However, the telephone bill still remains. So if your employer has telephone reimbursable component in your CTC, do submit your bills on timely basis to claim them as a tax deduction. Now that we've discussed a lot of things, like we've gone through the CTC, understood the taxability of various components, and also understood the reimbursable component, let's have a look at your salary slip to understand what goes into it and how each component looks like. As you can see from here, on the left side are all your amounts that you receive, which is your salary, HRA, which is partially taxable, your special allowance, which is completely taxable, LTA, which is also non-taxable because you would submit the bills. On the right hand side of your salary slip, you see things like taxes, which is deducted by your employer, profession tax. Now, profession tax is a tax which is paid by your employer to the state government. Now, this is not necessarily levied in every state. You must check your salary slip to identify this. Generally, a profession tax of 2,500 rupees is paid each year. So, 200 rupees is deducted each month from your salary slip. An employee and employer's contribution towards PF is the investment amount that is made for you. So after all these calculations, the amount that you would receive each month in your bank account is given. I hope this video has helped you understand the various components of your salary structure, got you introduced to certain concepts like HRA, LTA, which you hear every day in your office. So we don't want taxation as a discussion to be happening for you only when you have to submit your proofs to your employer or when you're filing your income tax returns. Taxation forms a huge component of your income each year, so it's better to understand it in detail. So watch out this space every Wednesday and Saturday for more such videos on taxation and various other financial concepts, specially brewed for you by Wealth Cafe. Until then, don't forget to like, share and subscribe to our channel. Thank you. Have a good day. Happy investing.